morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian shares fall after another record for the S&P 500 as traders weigh the impact of Donald Trump's incoming agenda. Bitcoin surges past $89,000 for the first time. The dollar hits a one-year high. The president-elect's team takes shape with Florida Senator Marco Rubio expected to be named as Secretary of State. We will bring you the latest. Plus, a breakthrough on a global carbon market. We are live at the UN Climate Conference in Azerbaijan. Live pictures right now from the COP conference. Happy Tuesday, everyone. Is risk off across these markets? Yields are up, equities are down. Repricing across the equities markets after a fresh record, as we said, for the S&P 500, the 51st of the year. But it seems there's a bit of profit taking at the very least coming through these markets right now. And European futures looking to erase the more than 1% gains that came through on Monday for European stocks. European futures currently pointing lower by 0.9%. Here in the UK, FTSE 100 lower, pointing lower by 40 points. Commodities under pressure, by the way, so that could be a drag on UK stocks. S&P futures just looking to lose around 9 points so far in the session. Nasdaq 100 futures pointing lower by around 29 points, off by 0.1%. Let's flip the board and look cross-asset. We are talking about a strong dollar once again and a repricing across the yield markets, the Treasury markets, as traders come back to that asset class after the holiday of the yesterday, of course, in the US. So yields are higher and money moving out of US Treasuries. 433 right now on your benchmark 10-year. Euro dollar once again under pressure, and the softness continues for the single currency. 106 is parity, something we are looking at in the next few months for the single currency. Currently down 0.2% versus the US dollar. Bitcoin, wow, what a run-up. Record after record just being pushed aside by the biggest market cap crypto in that space. Currently at 88,362, as we said, having crossed 89,000. Is $100,000 now viable for Bitcoin before the end of the year? Brent trading at 71.61, currently down 0.3%. Let's cross over to Singapore right now. Avril Hong standing by for a check on the Asian markets where there is pressure. Avril.
There is so much pressure. It's looking really bad in the markets today, Tom, and Asia stock gauge is losing by the most in more than a month. All the sectors are down. The info tech sector is down by the most since September. So just to give you a sense of the risk off, the CSI 300, which earlier managed to clock gains, succumbing to losses. Hang Seng extending declines. And you might wonder why. I think this is investors not liking the added layer of uncertainty given these reports of who Trump might be appointing to cabinet. Is these China hawks? What is that going to mean for growth prospects for the region? So we are also seeing these Chinese tech names getting hard hit today ahead of earnings this week and the next. The Hang Seng Tech is down. Flip the board. I wanted to give you a further sense of the risk off. Today, Bloomberg sources said that we actually have Chinese authorities mulling a plan to slash home buying taxes for the megacities. Shanghai, Beijing, cut the D tax from 3% to 1%. The idea here to spur appetite for home buying, property sales. But despite initial gains on this Bloomberg gauge of Chinese developers listed in Hong Kong, look at how it's sitting now. Again, not enough in terms of stimulus and promises. Flip the board and take a look at how the Trump trade is playing out in the FX space as well. Of course, this is a story of the dollar strength, but the EM Asia currencies are getting really hard hit today amid the risk off. The Chinese yuan is getting a bit of a double whammy, not just what these tariffs are going to mean for China, but perhaps also how these terminal rates in the US are going higher. We also have the PBOC today coming through with yet another weak yuan fix. So you get the sense that maybe even on the monetary front, they might be more tolerant for a weaker Chinese currency. Really about the Trump trade today. Tom.
Yeah, and it's a reminder, but that weaker yuan could be in the toolkit for policymakers and officials in Beijing if that tension with the US escalates. Avril Hong, thank you very much indeed with the market check. It's an ugly session so far over in Asia. A deep dive there coming through from Avril Hong standing by in Singapore. Avril, thank you. To Bitcoin right now. Wow, the superlatives come thick and fast, surging past $89,000, just below that right now, lifting the total value of the crypto market above its pandemic era peak. This as buyers continue to bet on a boom under President-elect Donald Trump. Let's get more then from Bloomberg's Valerie Hetal. Valerie, record after record just being mowed down by Bitcoin. It's hard to see what stands in the way of this rally right now.
You're right, Tom, and I have another superlative for you. The market cap of Bitcoin has now surpassed the total world's value of silver. Just take a second to think about that. But Bitcoin over the last week up nearly 30% as this Trump trade picks up steam. I want to flip on and compare this to the meme stock mania rally that we saw in the early 2021, late 2020. A lot of questions out there whether this big rally in Bitcoin could ignite more froth in the equity market and lead to meme stock mania 2.0. Let's flip on and talk about some other Trump trades that have picked up steam in yesterday's session. One of them being the equity market notching another record high for the S&P 500 and Russell 2000 futures. That's the small caps in the U.S. also seen as a beta to these Trump trades, is exposed to domestically led U.S. growth. Those also hit the highest that they've seen since 2021. And the Bloomberg dollar, Tom, hit another high in the last overnight session for the year. It's up nearly 2% now since the election. Now, one market that you can compare has been relatively calm is the U.S. Treasury market. It was on a cash holiday yesterday. Let's check how it traded in the Asia session. Yields are higher, but Tom, this steepening of the curve, the 10-year yield's only up 3 basis points. We have heard some warnings, though, from some famed market players on the fact that we could see the bond vigilantes return, and it could perhaps be a higher jump in yields that could dent this equity market. Take a listen.
He cares about market discipline, and if bond yields go higher and the stock market correct, that's a bond vigilante in the market saying your policies are unsustainable. And if he chooses the right economic advisors, they're going to warn him against policies that eventually have such a market impact and may lead to policies that are more moderate.
So, Tom, it could perhaps be another jump higher in yields that could dent this risk-on rally, but so far right now, we're just not seeing it.
OK, Valerie Hetal, thank you very much indeed on what is happening across these markets with that focus on crypto. Maybe what it indicates a meme stock re-emergence, possibly in the offing. To Donald Trump's new team right now, the new cabinet is beginning to take shape. With more high-profile appointments, the president-elect is poised to pick 2 men with track records of harshly criticising China for key positions in his new administration. Senator Marco Rubio is expected to be named Secretary of State, while Representative Mike Waltz is in line to be National Security Advisor. Let's bring in Bloomberg's Kriti Gupta right now, anchor of the opening trade, for the details. One name more familiar, I would argue, to international viewers than the other. Marco Rubio, fairly familiar. The importance of this role, Secretary of State, hugely important cabinet position. What do we know about what it signals around China-US relations?
Well, Marco Rubio, from an internal domestic perspective, has been not only outspoken about China and some of the other international players. Russia, of course, has been one. Iran has been another that he's been outspoken about. But he's internally kind of known as the connection of the Republican Party to the Latino vote. And this is really important because he, of course, hails from Florida, where there is a major Cuban population, not to mention broader Hispanic population as well. The reason this is significant is because when he was initially, remember, he did have his own run for president. When he was initially brought in to work with President Trump and kind of allied in that way, it was initially to tackle the domestic story, things like the border, things like immigration. Now he's talking about that China policy, and it's the fact that he's actually been sanctioned by Beijing is probably not the strongest start as a Secretary of State. Again, this comes off after years of very harsh comments, but it is something that you can see really creates and kind of amps up this anti-China rhetoric.
Yeah, indeed. And China will have to work out a solution if Marco Rubio is ever going to visit China, given that he is sanctioned by that country. A redhead crossing the terminal right now from CNN reporting that Trump has picked Kristi Noem as Homeland Security Secretary. So some more details coming through for the team. Again, Kristi Noem being picked as Homeland Security Secretary, according to CNN, for this new Trump administration. Talk us through a name that, again, I think would be less familiar to an international audience, which is Mike Waltz. What he stands for, what he brings to this team.
Well, it's a similar story in that he's also very, very tough on China. You are seeing very carefully that the people that are being picked for these cabinet positions have that stance. And it's not just Mike Mike Waltz. I'll come back to him in a moment. It's also the new UN ambassador as well. She's a senator from New York, from the House from the Republicans. She was a House of Representative. Her name's Elise, and it's very, very important to keep this in mind, simply because he is picking the folks that have been early supporters, especially at a time when a lot of people were criticizing him, of course, for the January 6th and his role there as well in those Capitol riots as well. The fact that he's leaning into his loyalty base, but also two that are very, very tough on China. And that's where Mike Waltz, that chosen pick, is so important, because he has historically been very, very tough on China in a way that I would argue that even Marco Rubio hasn't gone to. As a national security advisor, that brings into questions things like defense to Taiwan, funding to kind of other South Asian countries as well. Remember, Japan, South Korea at the moment are trying to get more of that Pacific funding. At the meantime, the Pacific wing of the U.S. Defense Department, for example, is extremely underfunded. And this is something nobody within Washington is really talking about as much as a threat, the focus largely being on the Middle East and Ukraine as well. Mike Waltz could change that narrative.
Very interesting. Part of the rationale for the Trump team wanting to extract themselves from those two conflicts to focus, of course, on the Asia-Pacific region. And Beijing will be taking notice of these picks, of course. Kriti Gupta, thank you very much indeed with the context around some of these names. Anchor for opening trade, of course, which comes up at 7 a.m. UK time. Coming up, Treasury's under pressure as bond investors remain cautious on Donald Trump's plans. You're seeing a modest sell-off right now. We're going to discuss that, the US economy and more. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. US Treasuries continue to face pressure this morning as investors look to rekindle the sell-off spurred by Donald Trump's victory last week. On Wall Street, the uncertainty around Trump's policies is pushing some strategists to hold tight to their neutral recommendations in the wake of the election, though others like Ed Yardeni see further upside to the S&P 500 after these fresh records. Let's bring in, at this point, Hetal Mehta, Head of Economic Research at St. James's Place, who says 2026 might be the year that things reach a pinch point in the US economy. Before we push out to 2026, the here and now, Hetal, the pressure coming through once again on these Treasury markets, and yet the equity markets of the US continue to punch through fresh records. There's a mismatch, it seems, in terms of bond market pricing and the equity market story. When does that reach a head?
So I think what we're going to see in the near term is that equity markets are going to focus on the upside to growth. We will possibly see a cut in corporate taxes. So I think that's the bit that equity markets are focused on. Further out, it's clear that this is also likely to be an inflationary set of policies that we get from the new administration, and that's why we're seeing the bond market focus on the thing that it cares most about. So there is a different reaction, or it feels like they're reacting to different parts of the policy agenda. I think what we'll see over the course of next year, if the tariffs do come through, if we do start seeing the curbs on immigration also start coming through, those things will be inflationary for the US economy. And I think from 2026 onwards, as those policies start to take effect, that's going to start weighing on growth. So we've actually changed our economic scenarios. We still think in the near term we have this soft landing, but it's got a kind of tinge of inflation to it. But as we progress through next year and into 2026, I think that the growth aspects are actually going to see quite likely weaker growth, given the economy's been actually growing in quite a strong fashion of late.
I guess the question is, is there a naivety to the equity market story, given the question marks around inflation and higher for longer interest rates?
We actually think that US equities are quite expensive, and so there may be some short-term focus, as I said, on the corporate earnings side if taxes are going to be lower. But it is also not clear at all what the policies will be. how quickly they'll be implemented, the scale of which, the tax cuts may come through. So I think this is still quite speculative, and from our perspective, US equities are actually still very overpriced, and we think there's better value in other regions.
Where does that take you then? Where are you finding that better value at this point?
The other developed markets, so we have a slight overweight in Europe, UK, and also emerging markets. Just think that there is more scope for upside versus the kind of very concentrated market that the US has become.
Is that because when your call on Europe is interesting, given the stagnation we're seeing here, the challenges around all sorts of different factors feeding into this challenged European economy? Is that assuming that you're going to get more rate cuts from the ECB? Is it assuming that a lot of that pain has already been priced in? What assumptions are you making about Europe to have that overweight call here?
So for us, it's much more about the kind of medium to longer term, and valuations still look quite attractive. I think the ECB is likely to cut, and that will support the credit conditions survey from the ECB also showed that credit conditions are easing. So I think we're likely to see this kind of temporary economic weakness, partly stemming from the weakness in China. But any China stimulus should hopefully stem the downside in European growth. And European equities are probably more broad-based in terms of the sector composition. So we actually think there's more balanced opportunities there.
OK, and your overweight EM equities, does strong dollar challenge that view?
I think it may do a little bit, but again, it's been a sector which has sort of underperformed for some time, and from that medium-term valuation perspective, which is what drives our asset allocation process, we still think that's also attractive.
When it comes to the Bank of England, so you like UK equities at this point. Maybe that's a valuation story as well. When it comes to the Bank of England's function and reaction function to increase fiscal spending, the budget that came through, of course, and maybe globally slightly higher and stickier inflation, traders now pricing in or phasing out any additional cuts this year for the Bank of England, and possibly just 50 basis points of cuts between now and June of next year. Does that seem rational to you?
I think it's a rational move to think that stronger growth, stronger inflation should make a central bank quite cautious about cutting interest rates. We've seen the stance from many central banks more as policy normalisation rather than easing. There isn't a specific shock that we think the central banks, such as the Bank of England or the Fed, are needing to react to. It's a calibration back to something like neutral. And we've long thought that something akin to a 25 basis points a quarter is appropriate for the Bank of England, given the sticky inflation. So I actually think that the budget and the way we're seeing the market reaction play out does reinforce our view that this should be a gradual cutting cycle from the Bank of England to get to neutral, whatever that might be. Even the Bank of England, there's lots of debate about that, but a gradual move to that rather than getting to neutral and beyond, because we don't see the case for stimulus in this environment where you have actually got, in the near term, this fiscal boost.
25 basis points per quarter from the Bank of England is likely. Hetal, thank you very much indeed. Head of Economic Research at St James's Place, with an overweight view on emerging market equities and seeing US stocks looking a little richly valued at this point. Here's what else to be thinking about today with the day ahead. 7 a.m. UK time, we'll break this for you. October CPI out of Germany. So the inflation story out of Germany getting some colour at 7 a.m. Here in the UK, meanwhile, we're going to get economic data, unemployment data at 7 a.m. out of the UK. And later today, it's the OPEC monthly oil report as well. So that will give some details in terms of the outlook coming through from that cartel, with Brent trading at 71.62, down 0.3% so far in the session. Coming up, I'm joined by the CEO of Temenos, the Swiss software company looking to rebuild investor confidence after a damaging report and disappointing earnings. That is coming up in just a short while. Stay with us. This is Bloomberg.
I think they're in a weaker position because potential growth has fallen, and by the end of the decade could be as low as 3%. China is dealing with issues that are structural rather than cyclical. Maybe the Trump threat or shock is going to force China to do the kind of domestic reform are needed to have more consumption and less export, but I'm not sure that that's going to happen anytime soon.
OK, that, of course, Nuri Roubini, CEO of Roubini Macro Associates, speaking exclusively to Bloomberg TV about China's position as it prepares for another Trump presidency. Now to some other stories making the news this Tuesday. It is reported that EU is to change its spending policies to potentially redirect tens of billions of euros to defence and security. That is according to the Financial Times, which reports that the policy shift would apply to about a third of the EU's common budget. Member states will be told in the coming weeks they will have more flexibility to allocate so-called cohesion funds to support their defence industries and related projects. The US military, meanwhile, says it's launched strikes against 9 targets associated with Iranian groups in 2 locations in Syria. In a statement on X, Central Command says the strikes were in response to several attacks on US personnel in the region. It says the strikes will weaken the Iran-backed group's ability to plan future attacks. Coming up, German tech firm Infineon set to report earnings. Our interview with CFO Sven Schneider is coming up next. Across these equity markets, it is risk-off. European futures down 0.9%. There's some bloodletting in the Asian session with the HSCEI over in Hong Kong down 3%. The HS Tech Index down 3.8%. US futures also off by 0.1% after a 51st record high yesterday with the S&P above 6,000. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian shares fall after another record for the S&P 500 as traders weigh the impact of Donald Trump's agenda. Bitcoin surges past $89,000 for the first time, the dollar hitting a one-year high. The president-elect's team takes shape with Florida Senator Marco Rubio expected to be named as Secretary of State. We will bring you the latest. Plus, a breakthrough on a global carbon market. We are live at the UN Climate Conference in Azerbaijan. Let's check these markets then. It is risk-off. It's a challenge session, a painful session. The pain trade is there over in Asia, and the ripple effects being felt as you look at European futures currently looking to almost wipe out the more than 1% gains that came through for European stocks yesterday. Currently, European futures pointing lower by 0.8%. FTSE 100 futures pointing off by about 38 points. Commodities under pressure in the session today. S&P futures currently looking lower by 0.1%. That's after the S&P crossed through that 6,000 level for the first time yesterday, a 51st record high. NASDAQ looking to lose just shy of 10 points, currently at 21,207. A little bit of very modest pressure coming through in terms of NASDAQ 100 futures. Let's flip the board and look cross-asset. You do also see some selling pressure coming through for Treasuries. Yep, that trade is back after the holiday of yesterday. 432 is what's being yielded, close to 433 on the US benchmark 10-year. Yields just up 2 basis points. You're seeing a bit of selling pressure coming through across the curve. Euro dollar at 106. The single currency currently down 0.2%. Do we get parity euro dollar at some point in the next few months as dollar strength continues at a one-year high right now for the greenback? Bitcoin, yes, it cost through $89,000. Record after record tumbling in the face of this Bitcoin bull market on expectations that the incoming Trump administration will push through policies that are supportive, including putting in place regulators who are pro-crypto, even talking about a potential strategic Bitcoin reserve. And, of course, Trump has said he wants the US to play a central role to be a global superpower when it comes to crypto. 88,626 right now, up 0.7%. Brent trading at 71.70. To the earnings story right now, we have lines crossing from SoftBank. We know the focus, of course, is what is happening with the Vision Fund, some of those bets on AI, whatever Mathias' son has to say about the next AI bet. SoftBank, by the way, is up 50% year to date. First half net sales beating estimates for SoftBank, reporting half-year group results right now. In terms of net income, coming in at just over 1 trillion yen in the first half. Sales also beating estimates in the first half, 3.47 trillion yen. In terms of net income, a comfortable beat in the second quarter for SoftBank. Net income coming in just shy of 1.2 trillion yen. The estimates had been for around 294 billion yen. So a comfortable beat in terms of second quarter net income. We have earnings crossing as well from the chip maker listed in Germany. Infineon sees first quarter revenue of about 3.2 billion euros. That is a miss from estimates of 3.77 billion. So it's a miss when it comes to the first quarter revenue for Infineon, the preview, of course. In terms of the fourth quarter, revenue came in at 3.92 billion. That was also below the estimates. But it's the guidance on the first quarter that is going to get the attention of analysts and traders. Talking of Infineon, we've been speaking to the CFO of that chip maker, Sven Schneider. Speaking with Bloomberg's Oliver Crook about the latest earnings. Take a listen.
First of all, if you think automotive, Infineon is very different from all other semiconductor peers. Why is that? It's in terms of regional footprint, but it's also in terms of the business exposure. Regionally, we have leading market positions in all important markets. For example, number one in China, number one in Korea, and also number two, Japan or other markets. So therefore, you have a diversification. We all know that certain markets are a bit slower, but China, for example, is developing very strongly. Number one. Number two is it's the content. We are leader in power. We are number one globally now in automotive microcontrollers, which are used for a variety of functions. And therefore, everything which is centered around e-mobility or software-defined vehicles, autonomous driving, plays into our cards. And that's why we were the only automotive supplier who could grow last year 2% at least in a year where the number of cars was flattish. So these trends continue to be there. Structurally, there's absolutely no change. There's even a renaissance of some what we call plug-in hybrids, where we also have a nice content growth. But as I said, the next quarters will be overshadowed, overclouded by this inventory management. But structurally, there is no change. And on top of that, there is this new material called silicon carbide, where we're also seeing a lot of additional demand, for example, in inverters.
But given the sort of these uncertain times in terms of inventory management, we don't also really know when these things change, right? We've been waiting for the recovery of China for several years, recovery of the auto industry for a while. So it's sort of hard to tell. There's some uncertainty ahead. In these uncertain times, what can you control? Is there going to have to be a larger focus on, say, cost? This has been the focus for many German companies I've spoken to.
Yeah, that's a very important point. You have to manage what you can control in this environment. It's of utmost importance. What that means to us is there needs to be a very strict cost control. You may also be aware, Oliver, that we have announced in May of this year a structural margin improvement program called Step Up, where we are targeting a high triple-digit million euro savings amount. In the first half of 27, we are making great progress. But it's also the investments. We have cut our investments by 10% compared to last year, 20% compared to 2 years ago. And we are focusing on the strategically relevant decisions like our Dresden Module 4 or the silicon carbide expansion or gallium nitride expansion. You need to manage that. And the other thing, which is a very important measure in such an uncertain environment where you are absolutely right, you do not know when the demand comes back, is the loading of the fabs and the inventory management. So these are elements we are managing very closely.
Given the sort of political crisis here in Germany, what sort of specifically do you want to see from the next government in terms of support for either the chip industry or the auto industry? What does this government need to prioritize?
I mean, this is not a very usual situation in Germany. Therefore, we are all now waiting to see the political agenda and making the decision when potential new elections will be held. What we would expect is very clearly that, first of all, the government is back in full force so that they can address the geopolitical, the economic challenges which we are all facing. We want to have certainty on the regulatory framework. I would recommend to focus on the energy topics. I would recommend to focus on international trade elements, also with new governments somewhere else in the world. And lastly, but that's more a general comment, also on the defense side, I think here the new government needs to take a very clear position in order to safeguard the situation here for all of us, not only economically.
The CFO of Infineon, Sven Schneider, speaking with Bloomberg's Oliver Crook in the last few minutes. Some redheads crossing the line right now, crossing the terminal buyer, and this is an upgrade to their full-year view on EBITDA. They have upgraded that view. They now see 10.4 billion euros to 10.7 billion euros. The estimates had been for 10.35 billion. So in terms of the full-year view on EBITDA, coming in higher potentially and specifically at the top end of that range versus the estimates. That's after third quarter sales missed estimates. Core earnings as well in the third quarter came in slightly below the estimates. But again, it's the view on the full year adjusted EBITDA higher than the estimates for Bayer. That stock is down around 27% year to date. Of course, the pharmaceutical and life sciences business listed in Germany. Let's get back to the software space right now, because Swiss software provider Temenos is presenting the outcome of a business review at a capital markets day today. The company is seeking to rebuild investor confidence after a damaging report by short seller Hindenburg Research back in February. Temenos shares have struggled to recover since then, with third quarter earnings also falling short of expectations. Jean-Pierre Brulard was appointed CEO in late April, early May, following activist pressure. He joins me now here in London around the set. Jean-Pierre, thank you very much indeed. On a busy day, we appreciate you coming in. Talk to us about how you're going to regain the confidence of investors then.
Thank you first, Tom, to have me on the show. Yes, as you say, it's an important day for the company, as we will announce at Capital Market Day a new start, a new strategy as well, based on a growing perspective as well. So, and our goal is to grow above market share.
Mm-hmm. OK, but specifically, what are you going to be outlining in terms of the plan today to get this company back on a sure footing? The Hindenburg Research report dropping before you took over, of course. Partly your role is to restructure the business and reassure investors. And it looks like, looking at the stock price, investors still need to be reassured. What is specifically you going to be outlining today to get that confidence back?
So first of all, as you may know, the board has conducted a thorough, investigation as well, just to respond to the allegation. So we are starting from a clean slate from this perspective as well. And the goal of today is really to reinsure the investor on a growing strategy basically built on solid foundation of the company. And I found a solid foundation of the company. So it's not a turnaround. It's basically a transition to something which is, to our position, will allow us to grow above the market share. OK, just to remind viewers, the Hindenburg report alleged major accounting irregularities. They suggested that Temenos manipulated earnings and the practices were an open secret. The review, independent review, has suggested that is not true and that didn't hold water. Just for the context for our viewers, what is the biggest challenge for you in the business right now then? So today we articulated our growth strategy on growth lever to expand where we are good at, which is to provide an end-to-end solution to banks. And we are serving today more than 1,000 banks across the world. So it's we are the market leader of this banking industry as well. What we would like to do, it's really to expand in the geography, mostly in the US and Western Europe, where we would like to expand what we are good at. OK. There's been a bit of delay. We've seen some evidence of delayed client decision-making, partly as a result of the Hindenburg report. Is that still an issue, or has that been resolved? Are you still seeing that decision-making being slow and indecisive from some of your clients? It was the case mostly in 2024, this year as well, as we are lost, to my opinion, 2 months of sales cycle that in a way have some impact on our third quarter. But in a way, as I mentioned, we are... Is it continuing? No, we are starting a new journey, a fresh start as well. It's behind us.
Mm-hmm. That part of it is behind you. What about in terms of that cloud delivery? Is that gaining traction amongst some of the smaller lenders? The smaller lenders you seem to be doing quite well on. The larger lenders, is that gaining traction when it comes to cloud delivery for the business?
Yeah, all these banks, they are struggling with operational issues to reduce costs, to be more compliant with regulation, as well in a way to take full advantage of the new technologies at cloud and GenAI as well. So all these large companies are moving to cloud strategy and to cloud architecture. And it's a trend that we have observed more and more.
Okay, but bigger banks specifically, are you locking in some clients amongst the larger banks out there?
It's a good question because it's a strategy by tiering of the bank. The larger bank, because they have the skill set, they will like to deploy on their own cloud. And I was in London 2 or 3 weeks ago to visit a CEO of a very large bank. He told me, I like your software, but I would prefer to do that in our cloud. Meanwhile, the small tiers, the small banks, they like as well that Temenos is conducting from on their behalf as well as software as a service and to take this IT operation in our behalf.
What's happening with on-premise licensing? Makes up about 30% of sales. It's been challenged post-COVID. Are you seeing a turnaround there?
It's a small trend. According to the market analysis we have conducted, the on-premise will stay dominant. It's 67% of the market today, and 2028 will be on the range of 59%, and that differs a lot from geography and tier as well. So we are continue to give to our customer the choice of deployment between on-premise, cloud, and SaaS.
There has been a gap between your free cash flow targets and goals and the consensus amongst market analysts. You've come out with some updated goals today. You're targeting free cash flow of $420 million until 2028, and you're targeting over $1.3 billion in annual recurring revenue until 2028. How confident are you that you will actually meet those goals?
Yeah, we have conducted a serious analysis about our market opportunities that will allow to be confident in the fact that we will go above market. And as you know, EBIT and free cash flow were not the issue in this company. Our issue was to grow more than the market. And basically, this company came from significant business changes, to have more recurring revenue. Is behind us. We are doing 80% today of recurring revenue. And it's a company which is always good at, is ready to generate EBIT and free cash flow. What the investor will like to see is a growing strategy, and it's what we would like to do.
So those cuts to guidance are behind us?
Exactly.
Okay, Jean-Pierre, thank you very much indeed. Jean-Pierre Brulard, the CEO of Temenos. Really appreciate your time this morning on a busy day for you and the team. Coming up, climate negotiators secure a breakthrough on day one of the COP29 summit. We are live on the ground in Baku with the details. That is next. This is Bloomberg.
Demand is at record highs, both for oil and for gasoline and diesel. And so the demand is out there today. The industry's been very effective at supplying that demand. I think that's what you're seeing. And fortunately for us, with some of the turmoil in the Middle East, that available supply has kept the markets fairly stable. And so it's less of a demand issue, there's just a lot of supply.
Darren Woods, CEO of ExxonMobil, speaking to Jumana Pasechi on the ground at COP29 about oil demand. Let's bring in right now Jumana, who's standing by for us in Baku, of course, Horizon's Middle East and Africa anchor, speaking to a number of guests there, taking the temperature, as it were. Jumana.
Oh, that's a good one, Tom. Good to see you. All right, joining me right now is OECD Secretary General Mathias Corman. Great to have you with us. I'm actually going to start on a perhaps less positive note. Your own assessment, OECD's own assessment, is that climate policy efforts have actually stalled in the last couple of years. And that is not even taking into consideration that this year, and many agencies are warning that this is going to be the case, is going to be perhaps one of the warmest years on record. Why do you think these policy efforts have stalled so much, and how do we bring momentum back?
Well, it's certainly true that we need to step up. The world needs to step up. We are way short of where we would need to be in order to meet our shared objective of carbon neutrality by 2050. And I mean, that is one of the reasons we're here, to discuss on how we can take things to another level and how we can better translate ambition and goodwill into action and outcomes.
Yeah, and people are calling this the financing COP because there's a lot of focus on that financing that's needed for developing countries. Already, we've got one major announcement out this morning. They've agreed to a carbon pricing framework mechanism. On the financing front, what do you think we need to see in order for this COP to be successful?
Well, firstly, having this result on the first day of an agreement in relation to the carbon credit quality standards, which sort of will be a key element in operationalizing the global carbon market, is actually very significant. It will, if we can get it to the next level, it will help facilitate the establishment of a global carbon market, which will channel significant additional financial flows into developing countries, because investment will go where the highest level of abatement is available, and with the credits that come with it. But beyond that, of course, I mean, this COP, the objective is to establish or to define a new collective quantified goal, and there is no doubt that we need to be successful in determining that, and we need to be successful in leveraging significantly additional private sector investment, and that is, of course, I mean, we're day one we've got 10 more days to go, so let's hope that we will get to the outcomes we need.
Yeah, well, there's one figure whose presence is looming large, even though he's not here in person, and that is President-elect Donald Trump. But let me just ask you a question specifically about climate policy. How much of a death blow would it be for climate policy, climate efforts, if the U.S. were once again to withdraw from the Paris Agreement?
Well, look, the American people have democratically chosen their president, and I mean, the Trump administration is the incoming democratically elected government of the United States, and so President Trump and his administration will represent the US voice in global conversations on climate change. Obviously, from the OECD point of view, we hope that we will remain on track of securing carbon neutrality, global net zero by 2050. And I mean, the US is a valued founding member of the OECD, and we will engage with the incoming administration as we engage with all elected governments across our membership and across our partner countries.
Are you bracing yourselves for perhaps rockier relations or more difficult discussions with the U.S.?
Our job is to work with the elected governments of the day, with the democratically elected governments of the day, and we will do that positively and constructively, and of course with a clear vision to continue to provide global leadership when it comes to tackling climate change effectively.
Yeah, let's talk about the economic impact. Back in September, the OECD said that the global economy is turning a corner, but you did cite risks, geopolitical, trade risks, and of course those risks have come to the fore once again with the return of President Trump. He's talking about tariffs, universal tariffs, broad-based tariffs everywhere. What does that do to the global outlook?
Well, we've seen indeed the global economy turn the corner, 3.2% growth this year on the back of robust trade growth and increases in incomes. And of course, I mean, with inflation continuing to come down in countries around the world, moving forward, we would of course like to see a continued strong growth in global trade, and it is always better for countries to talk to each other and to tackle any challenges and any issues through dialogue rather than in any other way.
Has the OECD prepared or is looking to do any work on the economic impact these tariffs could have should they be applied?
Look, we will work with all of our member countries and partner countries on, and we will provide our advice, our best advice to member countries, and that will continue. That will include providing our best advice to the incoming Trump administration.
So one other element of his election is he was supported by a lot of the tech community. Some of the big tech CEOs threw their weight behind President-elect Trump. And I just wonder if you see that as having any direct ramifications on this global tax reform that the OECD have been putting forward, and whether you see any room for perhaps further discussions around digital taxes, and the fact that President-elect coming back was so supported by the tech industry may torpedo some of those efforts.
Well, I would suggest that having certainty and stability in international tax arrangements is unequivocally in the best interest of internationally operating US businesses, including and in particular US tech businesses. So, I mean, the deal that's been negotiated by more than 140 countries through the inclusive framework on base erosion and profit shifting, we believe is in the best interest of multinational enterprises in the United States. And of course, we would like to see the final step taken as soon as possible. I mean, the global minimum tax is now a reality under Pillar 2. There is some more work to be done to land Pillar 1. What is the alternative? I mean, the alternative is that we will see a proliferation of unilateral digital services taxes, which will not be in the best interest of US companies operating internationally.
Secretary General, we're going to leave it there. Thank you so much. Tom, I'll throw it back to you. That was the OECD Secretary General, Mathias Corman.
All right, great interview. Jemana Basechi on the ground for us in Baku at COP29. Thank you very much indeed. There's a lot more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Monday. Just reminding you of some superlatives when it comes to the asset class at the moment. Yes, it's Bitcoin. Record after record falling for the cryptocurrency. Trump and his team have talked about having a strategic reserve for Bitcoin. We'll see if that comes to pass. Put in place regulators as well that will be pro-crypto and making the US the centre of the crypto industry. And the gains just keep coming through, that bullish wave for crypto and Bitcoin, which is up, by the way, about 30% since November the 5th. Altcoins like Dogecoin up even more than 60% for Dogecoin, for those of you who have exposure to that altcoin, of course. Now, let's flip the board and have a look at Tesla as well. Another beneficiary, of course, Elon Musk. We'll see what the role is, of course, for the CEO of Tesla. But expectations, there's momentum here. Expectations, of course, that whatever role he has in the incoming Trump administration will be positive, of course, for the electric vehicle maker and maybe some of the other businesses as well tied to Musk. Currently, it's up 40% since November the 5th. We'll see if that can be sustained. Let's flip the board and have a look at what's happening with gold, because there's been a little bit of settler pressure across the yellow metal as money has moved into things like Bitcoin and US equities. In fact, year to date, it is now just dipped slightly below the gains. We've had a 51st record gain, of course, for the S&P 500. It's crossed above that 6,000 level, and gold is now underperforming year to date versus the S&P 500. Deutsche Bank, though, saying there is still the case longer term for exposure to the yellow metal on the central bank buying and the haven demand. Now, Bloomberg can bring you exclusive interviews from the annual UBS European Conference taking place in London over the next 2 days. And later this morning, we're going to be speaking to the Bank of Finland Governor, Olli Rehn, as well as UBS Investment Bank Chief Strategist, Banu Baweja. The opening trade, though, is up next. This is Bloomberg.